Okay, just go and tick that purchases. Can you see the importance of ticking? So the reason why I realized that is because I was checking there. I realized that we didn't get so far we used everything for purchases. Okay. Can we go to other users? You don't have other incomes, ne?
No.
But we need to also check from the information because sometimes we can find that we've got other incomes, ne?
Okay.
So we need to check. If we check from number 1, we used it. It's okay. So number 2, if you can check, is a loan. That is not an income. Are you still with me? And then number 3, they say rent was paid. So rent paid is not an income. Depreciation is not an income. Repairs and telephones are not incomes. Amount written off is not an income. Here they say create allowances for credit losses. This one, we need to check whether it's an income or expense. I don't know if you understand me. This one, number 7. I'm going to explain what is allowances for credit losses, okay?
Okay.
Now, when we talk about the allowances for credit losses, it's like, if you are selling your items on credit, ne? Sometimes those customers don't pay and you write them off. What do you call them?
Debitors.
We call them debtors, but after you cancel them, after you write them off, what do you call them? They are called bad debts or credit losses.
Okay.
You understand what I mean? So, when we talk about the allowances for credit losses, it means we as a company, we must put money aside for bad debts. So if we have bad debts, we're going to use that money for bad debts. Do you understand what I mean? That is called allowances for credit losses. Yeah, like for example, you put let's say you put 1,000 rand aside and say, if or should I have bad debts, I'm gonna use that money to replace bad debts because bad debts will affect my business. Does that make sense?
Yes.
Yeah, that is called credit allowances for credit losses, and sometimes they call them provision for bad debts. Provision for bad debts.
Okay.
So
Allowance
according to the
credit losses or provision
for bad debts. But our book uses credit losses. Don't be confused, okay?
Okay.
Yeah, but some books are using provision for bad debts. That's why our books for bad debts, we use credit losses. But it's the same thing. Don't be confused.
All right.
Are we together? Now, here they say we must create. Okay? So when you create, now the word create, it means you are just creating from, in other words, we don't have it, we're just creating for the first time. You understand? It means currently our allowances for credit losses is 0. We don't have anything. Ne?
Yes.
So in other words, if I can give an example, in other words, our credit losses currently, they are 0. So now we must create from 0. Now we are going to have what?
3,000.
3,000. This is what they mean. So from 0 to 3,000. So every time you create, it means you must check the difference. Ne? What is the difference between 0 and 3,000?
3,000.
3,000. So that difference will be an expense. Why do I say that? Is because in future you will see that you are going to have something. Let's say it was something like 1,000 rand. Ne? Let's say it was not 0. Ne? It was 1,000. Remember, if it was 1,000, it will be shown here. It will be shown here. You will see under here. Under here, they will say allowances for credit losses. It will be 1,000, for example. Okay. So when they ask you to have a new one, so they will give you a 3,000. You're gonna compare 1,000 and a 3,000. The difference will be what?
2,000.
So that 2,000 will be an expense. So every time you increase allowances for credit losses, that difference will always be an expense. Does that make sense?
Yes.
But if you have to decrease, it will be an income. So you need to be careful here.
Okay.
So here is an increase because why? It was 0. Now they say I must create. It means from 0, we have got what now? We have got 3,000. So the difference between 0 and 3,000 will be the expense. So I'm going to show that adjust. We call it an adjustment. I'm going to put it under expenses. So you must be careful. This one sometimes is an expense and sometimes an income. So you can ask a question. So I'm going to, if you check this one of ours now, will I put it under incomes or must I wait for expenses? The one that we just did.
The 3,000.
Yes.
We will put it under expenses.
Oh, because
Um. Okay. I will explain how I understand it. Because we don't have it in our account. So if we have to edit, we have to take it from somewhere. So it's an expense for us because we have to take it back.
no, it's not
Like,
like that. It's not like that. It's because it was 0. Remember, the 3,000 that I'm talking about is not this 3,000. It's not this 3,000. You understand what I mean?
mm,
It's 3,000 minus 0. So that's why I want you to understand. Because why do I do that? It's because next time you're gonna have something there. So the 3,000 that I'm talking about is the difference between the two. Is this one? I'm gonna write it here. Is this one? I don't know if you understand what I mean. So how did I find this 3,000 here?
0 minus 3,000.
I said 3,000 minus 0. I said 3,000 minus what?
0.
So is the increase that I made during the period is the increase. I increased from 0 to 3,000 because next time you're gonna have an amount here. That's why I want you to know it like this.
Okay.
I don't know if it makes sense or not.
I don't know. Maybe no, I don't understand this part.
Okay, what if? Okay, let me do it like this. What if? mm, this thing is gonna, I know it's gonna challenge you. What if I had here it was not 0? What if it was 2,000 here?
Then we will have the difference of 1,000.
And that 1,000, will it be an income or expense?
An income.
Why?
Mm, mm.
Let me tell you something. It won't be an income. It will be an expense because we had to increase it. It was 2,000. We had to increase it to 3,000. As
Oh
long as we
yeah,
increase,
yeah. I
you understand what I mean?
understand. Yes.
But if it was a decrease, you said that this difference will be what? An income.
Yes.
But now, here's the situation here. The situation is, let me delete this one. This is the situation. It was 0. Now it's 3,000. We increased by how much? By
3,000.
That's why we say this 3,000 is the one that is going to be an expense. I'm going to record it under expenses. Does that make sense?
Yes.
So if it was the other way around, the difference was supposed to go to the income. That is what I mean.
Okay.
Okay, let's leave it for now. Maybe you're gonna check another question, maybe later, and then so that you can see. I think it's because maybe you started with zero because you think that zero is nothing. Zero is an amount. You must take it into consideration. So this 3,000 I cannot go and record. By the way, it is not this 3,000. It's not this 3,000. It's the difference between the two figures.
Mm-hmm.
Are we together?
Yes.
So okay, so far I don't have. Okay, let's go to number 8. Number 8, they say an amount of 1,000 has been recovered in cash from a debtor whose account has been previously written off. No entry has been made. Is there any income here or what? What do you think?
No, there's no income.
There's no income. There is an income. This person was written off before. He came back and we recovered. Can you see now? We recovered this cash of 1,000. So if someone has been written off, remember, if you write off someone, it's a credit loss, it's a bad debt. So if he comes back to pay you, can you say no to money?
No.
We call this credit losses recovered.
Mm-hmm.
You understand what I mean?
Yes.
We call it credit losses recovered. It's an income to us, so I'm going to put it under incomes. So under other incomes, I'm going to go there and put it there as the credit losses recovered, of which how much is it? I think it's 1,000. You see now. So here you need to know how to identify the so credit losses recovered are incomes. So credit losses is the same as bad debts recovered.
Okay.
Are we together?
Yes.
So this was number 8. So number 9, do you see any expense here or income?
Number 9, there's expenses.
Yeah, so it means I don't have any other income. So the only income that I have is the credit losses recovered. You see?
Yes.
So how much is the total of income of other How much is the total of other incomes? Other incomes, how much?
Let me calculate.
Just look at my screen, you'll see how much is the total income. If you add all your incomes, how much are your incomes now? How many incomes did you find?
1.
If you add them together, how much is the total? How many incomes did you find?
There's 100.
How much?
1,000.
So if you add all the incomes, how much is the total for the other income?
Only 1,000.
Only 1,000. I want that. So you need to, can you see? That's why, because the reason why I want you to say that is because next time you're gonna find maybe the more than one, you must add them together and put the total here. Does that make sense?
Okay.
So we have got all the incomes we need. So it means we can go and add gross profit and other incomes.
Mm-hmm.
Okay.
Yes.
So now If you add the two, your answer will be called gross income or gross loss. It depends whether it's an income, is a positive or a negative. So if you add them together, how much do you get?
43 4300 5,000.
No, spell it for me. I can't. So I'm gonna call
43
this gross income. And just wait. 43
5,000.
5000. Okay, thanks. So let's use the next page because I don't have space that side. Can you see now? That's how we found it. So we went there down there. You can see. I can even draw a line so that you can understand. So we edit this, ne?
Mm.
Can you still see my screen?
Yes.
Yes. So can you see? It's just you must know what you are dealing with it currently. So we were dealing with other incomes. We only found one income. So in future you can find other incomes like commission received. You can find interest incomes. Can you see now?
Mm-hmm.
You can find that one that I said, that 3,000. We call it what? We call it allowances for trade losses adjustment. Remember, it can either be an income or expense. But in our case, we said it's an expense. Can you see? That's why we don't see it here. But next time you can find it here after you have analyzed.
All right.
Are you
So
okay so far?
the financial statements only take the income.
Not the financial statements, the statement. Remember, financial statements has got about three statements. One of them is
Oh,
statement of profit and
the state,
loss.
the statement of profit and loss.
Yeah, remember, is the statement of profit and loss in full and other. Just that here, remember, let me just write it down for you here. It's the statement of, can you see something like this? So in full is the statement of profit and loss and other comprehensive income. It's the same as income statement.
Okay.
Are you okay? So here we
Yes.
need incomes and expenses.
All right.
So now we are going to deal with expenses because now we finished with the incomes. Now we deal with what? Expenses.
Expensive.
We call them operating expenses. But if you can check our book, they call them, like, I'm gonna write it down. So they say, I'm just gonna write it down now. They say, you can see here, I don't know if you can see. We call it less distribution. So our book call it like this, but it's the same as operating expenses. I don't know if you can see,
Um,
but I'm still right. Yeah?
is it
Can you see it?
in the same statement, the financial and loss statement?
Yeah, we're continuing. After, remember where I said gross income?
Mm-hmm.
Can you see where I said gross income? Can you see what I wrote here?
Yeah,
Is
gross
it?
income, less distribution, administrative,
Yes.
and other.
Yes. So, but sometimes, even if you can write less operating expenses, they still allow it.
Okay.
But I'm just writing it according to our book. But yeah, so here's all expenses. I'm gonna put them here. Remember, I was dealing with the incomes. I finished with the incomes. Now I'm dealing with what? The expenses here.
Okay.
Are you okay?
Mm-hmm.
So under that, I must go to the trial balance and find the expenses. Okay, that's how I prefer it. So you can go the first expense, for example, if you go and check what, I think you tick something so far. Eh? So just we look at the nominal accounts. What is the first expense that you see here that we have to record?
Rent expenses.
Let's put them in order. Let's start up there and let's
Mm.
not, yeah. Otherwise, you're gonna forget others.
Carriage on sales.
Come again?
Carriage on sales.
Again, there's another one. I don't want you to skip them. Just go there. Can you see whatever you didn't tick? Just check whatever you didn't tick. It will show whether you still you can decide on it or not. Start from the sales and check going down.
Purchases.
Didn't you tick that?
We did tick that.
So you can't use it again.
I took this. I took salary and wage. No, salary and wages. We didn't.
Yeah, what is salary and wages? Can I go and record it under expenses?
Yes.
Okay, now I'm gonna record. You see, I don't want to, because otherwise you're gonna forget. So we go to and put salaries and wages under what? And that's the first one, salaries and wages. And how much were they? How much?
Salary and food. 420,000.
Can you see now? But before you do that, before you put that for 20,000, we need to check. Is there any adjustment that talks about salaries and wages? Let's go back to the adjustment. Remember, we must check before you record anything here. We must also check the adjustment, because sometimes you can find that there's an adjustment that will affect our salaries and wages. So if you check from 1 to 9, do you see anything about wages, salaries and wages?
No, there's nothing.
There's nothing. So it means I can write it as it is. So my salaries will be for 20,000. Can you see now? I have to check first.
Okay.
Yes. Are you okay with this one so far?
Yes.
Please tick that one so that you cannot use it again. Let's go down. You can skip whatever we ticked. So we've used sales, we've used purchases, we've used salaries, we've used sales returns, we've used purchases returns, we've used carriage on purchases. Are you having the same from your side?
Yeah. And there's carriage on sales.
Can I go and record under expenses?
Yes.
Okay, for time being, just check the adjustment if you got anything under adjustment. For time being, I'm gonna write carriage on sales here. I don't know how much is it.
Carriage on sales is 33,000.
33.
Yes.
33,000. Any adjustments?
No, it's 14,000. Sorry.
It's 14,000.
Yes.
Any adjustment?
There's no adjustment.
There's no adjustment. Okay, let's see. There's no adjustment about carriage on sales, so it means we cannot adjust anything. It means that one is covered. Can you see how do we deal with them? Tick that one so that we cannot use it again. Okay, let's go back and check. So we check them like that, one by one. You tick that one. So what is the next one that you see?
Rent expenses.
Rent expenses. Can I go and put under expenses?
Yes.
Is there any adjustment that talks about rent expense?
Let me check. Yes.
Okay, number
3.
Number 3. So they say rent of 5,000 has been paid for March 2019. What is March 2019? Which period is that?
End of the year.
It's not ended. We didn't end the year there.
It's between.
No, just check when did you end your year?
Feb 2019.
So where is that March?
Oh, it's after the end of the year.
So what happened? It means they paid 5,000 in advance.
Oh, okay.
We call this a prepaid expense. Okay?
All right.
We call it a prepaid expense.
Where
But
do we put
remember,
it?
if you no, remember it's gonna affect rent. Okay?
Okay. Mm-hmm.
But the question is, how are we gonna affect rent? It's either we increase or decrease. It's up to you. So we need to decide. So what do you think? Must we go and minus or must we go and add?
Let me check. This was paid in advance for the year coming. I think we should increase
Why?
because
Remember that 5,000 has been paid already. It means it is included in that rent. How much is the rent given to you from the
oh yeah,
trial balance?
and then we are decreasing.
You must.
it.
When you see prepaid expense or any prepaid, you must always minus it because it has been included. It must not be included because it's for next
Uh,
year. So we only put figures up to this year. Are we together?
yes.
How much must I
Then
minus?
33,000 minus 500.
Not 500,
5,000.
5,000. So how much you get? 20,
28,000.
28,000. Can you see this? Okay, so this is how. Can you see any prepaid? If it was something, so it's prepaid, that's how we minus it. And then someone can ask and say, how do we know that it has been uh, included? It's because these figures, if you can check, they are all at the end of what? They're all, let me go back. They're all at the end. So they didn't, can you see? They say adjustment at 28th of Feb. So if they don't say anything, it means that amount has been included. Does that make sense?
Yes.
No. And then this prepaid is still going to be used in the notes. But don't worry, for now, just know it as a prepaid for now.
Okay.
Are
So
you okay with it?
can you
Yeah.
please show me the screen because I just see black.
Can you see the screen now? Can you see the screen now?
Not yet.
Can you?
Mm-mm.
Can you?
Yeah, now I can see.
Okay. Can we move on?
No. Please wait. Okay. Now you can.
Okay. Okay, next.
Next there is telephone.
Telephone. The amount is 18,000. Any adjustment? Let's go and check. Any adjustment about the telephone? Advice if you see anything about telephone.
Let me check. There's nothing.
Read carefully, you'll see.
I can only see the water and electricity.
You can see. Just
I
read
can
number 5 carefully. Read number 5 carefully.
Okay. Oh yeah, okay.
Can you see the importance of reading carefully? Otherwise, you're gonna think you don't have anything.
Yes. It was realized that repair to equipment for 3,000 made during the year had been debited to the telephone account.
What do you think? What happened here?
It looks like the 3,000 is already in this 18,000. We have to minus the 3,000.
You have to minus because they made a mistake, ne?
Yes.
So we must go and put telephone there, and we say 18,000 minus how much?
3,000.
3,000. And then obviously we get 15,000. Ne? Yes, just like that. Yeah. Yes, I'm glad that you did that one. So okay, listen now. So you just have to analyze the way you see it, as long as it makes sense. So you can go and tick. Do you still have something?
Yes, there's water and electricity.
Water and electricity of 40,000. We must go and check the adjustment. Anything that you think
There's,
will affect.
yes, an amount of 4,000 for water and electricity use in February 2019 has not yet been paid.
So obviously we have this. Do you think this 4,000 will be added or will be deducted?
It will be headed.
Yes. We what do we call it? Because the other one here was called prepaid. This one will call it what?
A debt
Because it's still eh?
isn't a debt.
This is going to be called accrued expense.
Oh, okay.
Can you see now? Because it's still to be paid, and it is for the period, our period. Can you see the difference between the two? Between this one and this one. This one was paid for next year, we must minus it. This one was not paid for this year, we must add it. It's going to be accrued expense. Expense still to be paid.
All right, understand.
Does that make sense? Okay. I'm gonna go there. That is water and electricity. $40,000 plus 4,000. Obviously, it's gonna be 44,000. Very good. Yes, so we can go and tick that. Okay.
Yes.
Under nominal account section, is there anything that is unticked here?
No, everything is done.
Can you see now? So it means we've finished extracting or identifying information here, but it doesn't mean that we don't have any other expenses. We still have to go to the adjustment, because you can find that even though we don't have those accounts here, you can still find them under what? Under adjustments as new. Can you see now? So we must also go to the adjustment and check for any possible expense.
Mhm.
Let's look at our adjustment and check any possible expense. Obviously, we use number 1. Let's look at number 2. What do you think about number 2? Is there any expense there?
Yes.
Which one?
The the interest.
The interest. They said is interest free. This loan does not have interest. Can you see now?
Mm.
So because it's interest free, you can't calculate that interest. But if, let's say, it was not interest free, this interest was supposed to be an expense, but it was not supposed to be put under other expenses. It will be put down there. I'll show you at a later stage as interest expense, because interest expenses are not put with other expenses. Does that make sense?
Yes.
Yeah, but there's no interest there because it's interest free. I don't know if it makes sense or not.
Mm-hmm.
Next, where do you think we can find expense?
We use 3. Um,
Number
4. 4.
number 4. Yes, I agree. And what is that?
Depreciation
A
for equipment.
depreciation there. And luckily they did calculate for us, so we don't have to calculate anything. Okay.
Mm-hmm.
But remember, in future you know how to calculate, ne?
Yes.
How much is that depreciation?
51,000.
51,000. So that is depreciation. So in other words, they did give us the depreciation, but if they ask us how to calculate depreciation, you and I know how to calculate. They will give us more information. Okay.
Mm-hmm.
Yes. That is the depreciation. So let's go and check once again.
Number 6.
Number 6. Why do you skip number 5?
Oh,
Remember
no,
number
we
5
did
we
number.
recorded under telephone.
Yes.
But remember there are 2 accounts. The other one is called what?
Repay equipment.
Yeah, the 2 accounts are telephone. We did record
And
under telephone. We minus because we made a mistake. Now we must go and record under what?
equipment.
Not equipment.
Repay to equipment.
Repairs. Yes, just right, repairs. So because there's a difference between repairs to equipment and equipment. So we are
Okay.
repairing here. We're not buying equipment. Okay.
Mm-hmm.
You can just write repairs. Or you can just write repairs to equipment. Doesn't matter. Let me write it. I'm just gonna write repairs. And how much is that repair? It's 3,000, eh?
Yes.
Any question? Okay. So we're gonna go and check. You said number 6, ne? What do you call that? I'm gonna write it there. It's 500, but what do we call it? An amount of 500 owing by the debtor, claimini must be written off. What do you call written off amount here? Accounting.
It's a debt.
But there's a term that we use here. If we write off someone, what do we call that account? Remember, even from accounting 1A we did. So if we write off someone, we call it something else. And I even said you can either call it this or this. So you've got option of calling it.
It's wages. I don't think it's wages.
It's called credit losses or bad debts.
Oh, let's write it down.
You can either call it bad debts or credit losses.
Okay.
Okay. Next.
I think that's all.
No.
We use the 7, the 6, Mama.
Number 7. Remember number 7, we never recorded number 7. And why did you not record it? We said?
Oh yeah. I get confused.
Why did we not record it before? Don't you remember this? Don't you remember this? Don't you remember this when we were talking about this?
Yes, I remember because it was under expenses.
Yes. So we're gonna go to expenses. I'm just gonna use this save because I don't have space anymore. Just gonna go there. I hope you remember this. Can you see how you write it? We call it what? Allowances for credit loss. What?
Adjustments.
Yes. Remember, I said next time the same thing can be under incomes.
Okay, yeah, I
Okay.
remember. Yes.
Now it is under expenses. You and I remember we did compare it because we had to increase. As long as you have to increase it, it becomes an expense. If you have to decrease it, it becomes an income. That's something that we need to remember. Because here it was from 0 to 3. Can you see 3,000? So the difference is 3,000. We increased 0 by 3,000. That's why we say it's an expense. But for exam purposes, the minute you see create, ne? Are we together?
Yes.
Just know that it's going to be an expense because it's from 0. Okay?
Oh, okay. Yes.
But if they say adjust, it means there's an amount already in the balances. You must compare the amount that you had from the balances with the amount that they say you must have. Does that make sense?
Yes.
So don't waste time in the exam. The minute you see create, just know that that adjustment is going to be an expense. Because creation meaning from zero.
Yes.
No problem. I think we dealt with everything that we wanted, and then now we can just go back and add all expenses. You can see all of them from here, and we're gonna put them here.
Mm-hmm. Let me calculate.
Come again?
What is the other one? It's
You added everything so far?
no, there's one missing. Can you please go down a bit? Next. I can't see.
It's not showing.
Mm-mm.
Is it showing this one?
Not yet. Yeah, no, I can see. The total amount is 578700.
It's okay. 587.
578700.
578700.
Mm-hmm.
Okay. So that is the total of all the expenses.
Yes.
Okay, now we take, can you see, we take the gross here, the gross income here, we minus these total expenses.
Okay.
So whatever we get is either positive or negative. Is a positive, we say loss. If it's a positive, say profit. If it's a negative, we're gonna say loss. So, but I think it's gonna be a negative, ne?
Yes, it's negative.
So I'm gonna call it loss before. Did you find it? Let me know when you find it.
143500.
Sorry, it's 1 4, ne?
143500.
1435. Okay, like that.
Yes.
Okay, because you know the format, because I ran out of the format. I even used the other. I'm gonna cancel this one, so don't worry about this because I ran out of space. So I just use this one so that we can get it now. So I'm gonna call this. This is gonna be another. You won't be confused, ne? It's like the other column. Ne? You understand what I'm doing here?
Why are you
Because I don't have
putting?
space in.
Can you put it
Come again?
under 3,000?
Remember, it's like here. I'm going back. It's like, can you see what I've been doing? So everything is here.
Oh
I'm
yeah,
using this
yeah, I
column.
understand. Yeah, I understand.
But because I don't have space, we've got too many expenses. That's why I'm just saying for now, let me use this one as another column. I don't know if you will be confused or not.
No, I won't.
Yeah. So it's a negative, né?
Yes.
So I'm gonna put brackets. Remember the word finance cost, né? Is the same as, don't be confused, but your book says finance cost is the same as interest expense. You can write interest expense. It's up to you. You understand what I mean?
Why don't we
Are we
say
together?
gross loss?
Come again?
Why don't we say gross loss?
No, remember, gross is everything before expenses. Can you see on top there we said gross profit and we said gross income up there. So this is like the final profit or loss that we're gonna make. So we can't say gross here, we just say loss.
Okay.
Or can just say net. It's not net loss. It's like yeah, it's like just loss or profit.
All right.
We only say gross. Remember, gross meaning is where you deal with the sales and cost of sales and things like that. Anything before expenses, we call it gross.
All right.
It's like your salary. If you're working, you know that before they minus all the deductions, they call it gross salary.
Mm-hmm.
But after they deducted some of the pension and everything, they call it what?
Net
Net. They
salary.
can call it net. Now, so we only say gross before expenses or before deductions.
All right.
Okay.
Mm-hmm.
So now remember we said loss before interest, and you and I know that we don't have interest, ne?
No, we
Remember
don't have.
that I don't know. If we checked, I think we remember we didn't have any interest on loan or interest. These are the interest on loan, interest on debentures, any interest that you have to pay as an expense. So we know that in this exercise there is no. But for the sake of understanding, I'm just gonna write it so that next time when you see it, you know that you must record it. Okay.
All right.
So I'm just gonna put it like this. See, can you see how did I put it? Let me just show you. Can you see what I wrote?
Oh yeah.
Can you see now? So next time if you've got the interest on loans and things like that, you're gonna put them there in brackets.
Mm-hmm.
And the last thing that you have, because here we've got a loss, we normally call it loss for the year or profit for the year. Or we can call it total comprehensive, but I'm just gonna write it for you here. It's up to you how you want to put it. So the last thing that you're gonna have here, we're gonna have loss or, so obviously it's gonna be the same because I don't have any expenses, interest expenses there. Let me write it so that you can see what I mean. Can you see how I wrote it there?
Mm-hmm.
So can you see now? So we can you see now loss, or you can say loss for the year, or you can say total comprehensive loss for the year. So it's up to you. So this is how it should look like. So the format is very much important.
Okay.
So if we made a profit here, if we made a profit, you will see here it was supposed to say profit before. Can you see here?
Yeah. Less before. Lost
And
before.
here you're supposed to have profit or total comprehensive income. It will say income here for the year if it was a positive thing.
Mm-hmm.
So this is what we call the statement of profit and loss and other comprehensive income. Sometimes it's also called income statement.
All right.
Are we okay? Are we okay? Yes. So now I want us to do, okay, if we check any question, you can think about the questions for now. Can you see, according to this question, the next requirement they wanted us to do current liability section of the what? Of the statement of comprehensive income. Okay. So, but you know, I think let's just this one. Okay, let's do the next one, which is called the one that is normally coming after this, because I don't want you to be confused. So after the statement of comprehensive income, they usually ask you for something called statement of changes in equity.
Okay.
So I want us, don't worry about this one for now. Do what you call the statement of changes in equity. So what I'm gonna do, I'm gonna delete. Remember, I used the space already. So if I go there, I'll tell you what I mean. So this space, I'm gonna just delete this one. Can you see now? Did you write everything?
Yes.